And good evening. We're doing it live right here, weeknights in the 5 o'clock hour, prime time in Los Angeles. Mottek on Money 5 nights a week for you, live on the air here on 790 KBC, streaming live online worldwide at KBC.com, and the on-demand Mottek on Money podcast for you at KBC.com, Apple, iTunes, and all of your favorite podcast platforms. And yeah, we're on the socials, too, at Frank Mottek on X, formerly known as Twitter and Instagram. Well, stocks finishing out the week mostly higher, heading into the three-day Labor Day holiday weekend. Both the Dow and the S&P 500 moved higher. Treasury yields, which impact those fixed-rate mortgage rates out there, moved up in the wake of that latest jobs report for the month of August. Our markets will be closed Monday for Labor Day. The Dow coming in for a closing gain of 116 points. The S&P 500 moved up 8, and the NASDAQ actually pulled back 3 points. We did have a winning week. The Dow up 1.4%, the S&P 500 up 2.5%, and the NASDAQ gained 3.2%. Have you noticed gas prices higher than where they were last year? This has the price of oil has hit a new high for the year today. Price of oil moving up to the highest we've seen, as a matter of fact, in about half a year, and highest we've seen since last November. And you're seeing that reflected at Southern California gas pumps as the price of oil is moving close to $86 a barrel now. We're looking at $5.37, the average price for regular gas in the Los Angeles area. $5.72, the average price for premium, and $5.99, now the average price for diesel. Taking a look at what else we're watching here this evening, the price of gold rising $1.20 to $1,967.10 an ounce. Also in reaction to the latest jobs report, we'll be taking a closer look at that coming up here this evening. The Labor Department says the economy added 187,000 jobs in the month of August, topping economists' expectations for a gain of 170,000. The nation's unemployment rate, though, did move higher to 3.8% from 3.5% in July. We're also watching what's happening in Sacramento as well as in Washington with the tax news. We're going to be watching possibly another government shutdown. Looks like lawmakers will be getting back to work on Tuesday following the Labor Day holiday break, and we're going to be watching that very closely and discussing that tonight with Grover Norquist, the president of Americans for Tax Reform. And what's going on in those smoke-filled rooms in Sacramento ahead of the Labor Day holiday weekend? Well, you'll be surprised as lawmakers meet behind closed doors to decide how to spend your taxpayer dollars. We'll get an update on that tonight from Susan Shelley, columnist for the Southern California News Group and host of the Howard Jarvis radio show, heard Monday nights right here on 790 KBC. But first, on your money, the markets, the economy, including today's big jobs report, the wrap-up of the week, the month of August, and the kickoff to the month of September. Joining us live now, investment expert Jim Hausberg, managing director at Hightower Advisors in Los Angeles, a longtime friend of this program. Jim, thank you very much for taking the call here heading into the weekend.
Hey, it's a pleasure to be with you, Frank. I don't know about investment expert, but I appreciate the nice words.
All right. Well, yeah, maybe a few more decades of experience, and then you'll have it. But always love speaking with you, Jim. And it's been a while since we've chatted behind live microphones, so give us your view of things here at the moment.
Well, Frank, I think, it has been a while, and it is a pleasure to be on. And I would just say to the listeners, what's made this market so different from that's going back 12 months, 18 months, 2 years is where interest rates are. The Fed has raised rates several times, as we all know, over the last 12 to 18 months. They've had a pause here and there. And that's all because of the increase in the rate of inflation, which the Fed is determined to slow down. And by raising rates, that's one mechanism they're using. And we're starting to see the effects of that. You're starting to see a slowdown. You're starting to see unemployment move up a little bit. Not as many jobs being added, even though it's been fairly robust. I think the economy has surprised people on the upside, and I think the market has clearly surprised people on the upside. But I think things are setting up well into the future for markets, and I say that primarily because, Frank, as much as we don't like to have to borrow money, like as you were mentioning with mortgage rates, if you're a borrower, it costs a lot more money today than a year, 2, 5 years ago. But if you're a saver, boy, Frank, you can get some pretty good rates of return and safety, which we have not seen for a long period of time.
So have we reached the point now where those savings rates are competing with the market, and what's that going to mean for the market ahead?
It absolutely has, Frank, and that's why I think markets we're going to, there's always going to be pockets, certain areas, certain companies, NVIDIA as an example, which has just been roaring because revenues are through the roof. They're selling their chips into, all these companies that are spending money on artificial intelligence. But when you back away from that, if you're a large institution and all of a sudden you're looking around going, boy, I can get 4.5, 5, 6% in treasuries, high quality corporates, as opposed to equities with the volatility that they bring to the table, I'm going to place some money there. And that's why I think some of the oomph that we've seen in the markets is going to slow down, especially the stocks in the what we call long duration growth. Companies are not making money today. They're not cash flow positive, but they're great stories and there's a theme to them. And I think those stocks were the ones that got hit the most in 22. They've come back, but the big tech names, the ones that are making money, have been the place to be. Apple, Microsoft, Google, and NVIDIA is now sort of fallen into that group, and Meta. That's where a lot of money is going to go. But yes, Frank, to answer your question, money is going into fixed income, and I think it's a great opportunity for investors to have a balanced portfolio that finally has a return on that 30, 40, 50% of fixed income.
All right. What about that 60-40 model? 60 in stocks, 40 in bonds. As the bond funds continue to take a hit this year, what are your thoughts about what's happening there?
Well, they've taken a hit, Frank, because rates have moved up and the value of the bond portfolios are lower. Not substantially lower, but they're lower. But remember, you're putting money to work today, you're getting that higher rate than you were a year ago. So last year, everything that took place, it couldn't have been worse, Frank. I've never seen a year where bonds were down 15% and stocks were down 18 or 19, whatever the number was for the S&P. This year, obviously, we're seeing big returns in the S&P led by the big names that I just mentioned. But I think bond portfolios, investors today, buying individual bonds, doing a year, 2, or even going out, 4 or 5 and maybe longer, are going to get a good return, even though on paper, the value of their bond holdings could be lower. You do get your money back when the bonds mature. And, that's one reason why I think, again, the big funds out there, the institutional money, the pension plans, the Taft-Hartley plans, these really big institutions, insurance companies, are placing money into fixed income more than they have. But don't give up on the equity market, Frank. S&P, historically has done this 9 to 10 number. I would expect that to continue.
On there live with Jim Hausberg. And what about oil, Jim, hitting a new high for the year today? And you're one of us, so you see those high gas prices here as you drive around. What about the oil names here?
Well, I think when you go back to oil, listen, and you mentioned all my years of doing this, trying to, call the price of oil and where to invest in that space is very difficult. Obviously, when the pandemic hit, as you recall, oil was below zero.
Yeah.
In the futures markets, right? And now we're, at $85 a barrel. And the oil stocks and some of the natural gas stocks and, other energy names have done well. Other commodities have done well also, or are holding in there. These rare earth minerals, all the stuff that goes into the electric cars, the batteries, the chips, all are powered by minerals, copper, nickel, and others. I think that's an interesting space to invest in. As far as oil goes, there's a lot of good dividend payers out there. There's, the MLPs, which gets you good dividend. So I wouldn't run away from it, but trying to predict the prices is way too difficult. And I just won't spend my time on trying to guess that one.
All right. It's been so long since we've spoken. I think we haven't talked since the AI rally took place. So no conversation would be complete without AI involved here, right? What are your thoughts about NVIDIA and those names?
Whenever these themes get red hot, it's usually a problem. The market has a way of discounting future earnings quickly. So in NVIDIA, Frank, correct me, 200, 300% move since January. I don't know. Does it have that much more in it at that level? No. Will these stocks trade higher over time? I would think they would, but you got to be super careful. And I think one thing we probably learned from 2022 is you're buying these themes, a lot of the ARK funds and some other, go growth stocks. People got hit hard. And by the way, a lot of these companies are doing well. I'm not even questioning that. Companies in cloud computing, Salesforces, we can go through a bunch of names, but the valuations have just come down. And I just don't see those valuations going back to where they were. We're going to have to see an IPO market that heats up. That would be helpful. But, I just think those names, and I'm not an AI expert. It makes sense to me from, like I said, we all see where money's going, and companies are spending money on AI. There's been other themes over the years. So I got to be careful. You got to know what you're paying for these companies, the valuations. I still think if you stick with Apple, Microsoft, put money into the Chat GPT, stocks traded well. It's even down. I think that's an opportunity to put money into that name. So technology has been a great place to be this year. The Nasdaq's been great. Keep up at that type of pace, 34% increase in the second, last 4 months of the year, 5 months. That'll be difficult. But stay diversified. The other thing I would say is buy companies that are increasing their dividends. The best and the most well-managed companies are the companies that are increasing the dividends. And I don't mean paying the highest dividend. I mean increasing them in the 10 to 15% range year in, year out consistently has been a great place to be. Microsoft is the name that falls into that category. So I keep an eye on those types of companies.
All right, and we still believe in real intelligence here, not artificial intelligence, it sounds like, so that is good. And what about NVIDIA? Well, it's up, 238% year-to-date at $485 and change, up $341.94. The 52-week low, by the way, was 108, and the 52-week high of 502 and change. So we certainly are keeping an eye on that one. Now, what about the cryptos, Jim? We have seen a pullback with, of course, the big name in that space, Bitcoin. What are your thoughts about crypto these days?
It's always been a tough one for me. We've talked about it before. I can't figure out how to value any of these. I do think things tied to business and blockchain and the ability of individuals or companies to transact overseas and get immediate credit is a positive thing. I think blockchain allows that to happen. Right now, if you want to wire funds overseas or even within the United States, it takes 5 hours, 1 day, 2 days overseas sometimes to get credit. And I think with blockchain and maybe, some of these cryptos that play in that business to business, there might be a play there. But for the life of me, I don't know how you can ever figure out what these things are worth. And I think it's highly speculative. It's momentum driven. And that's just a hard game to play for the long term. But if an investor wants to put money into Bitcoin, half of 1%, 1%, 2% of their portfolio, that's great. You tell me when to sell it, Frank.
Yeah, the best analysis I've heard so far is that it goes up because it goes up and it goes down because it goes down. That's the explanation we've heard. We have there's
a lot of research on that, Frank.
Yeah. So we have the most harshest critics of crypto and the biggest fans on this program. So we lay it out on the line and let the listeners decide. And we see Bitcoin right now, by the way, slipping below 26,000 here. So we're keeping an eye on that one. Any specific places, Jim Hausberg, where you are putting money now and or taking it off the table?
I've played around with some of these commodity names that I mentioned, Cameco, which is in the uranium business. I think those are trading well. I think Rio Tinto, which is in the rare earth minerals. I just have a sense that these commodities are going to trade higher, somewhat tied to oil. They're not producing a ton of it, so they're holding back. There's clearly demand out there. So I think prices will move up in the commodity space. It's not something I spend a lot of time on. Again, I like dividend growers. That's the place that I would put money. Vanguard has a Vanguard Dividend Growth Fund, well diversified, buying companies that are growing the dividends. Because if a company's earnings are growing and they continue consistently increase their cash flow, their dividends to their clients, that means the company is well managed. And I think over the long term, those are going to be your big winners. Apple falls into that category. Again, not a high dividend, but a continuous growth in that dividend.
Okay, the entertainment industry, obviously a big part of this economy. Hollywood completely shut down now with the writer's strike and the actor's strike continuing now. And you're right here in the heart of the entertainment industry, Jim. What's the buzz you're hearing from those folks? And what are you picking up? And what are your thoughts about the media stocks here, which, of course, have taken a big hit this year?
Well, do we buy stock in Taylor Swift, Frank? Because I would if that was possible.
Right.
There was actually a story about her and Beyonce's concert adding to GDP in the most recent quarter. Like significant numbers of consumer spending going to those concerts, which is incredible that that's even mentioned. That said, if you want to buy out of favor, you got to look at Warner Brothers and you got to look at Disney. And the assets that Disney has are not going away. They're trying to figure out a bunch. Obviously, the strike's having an impact. Let's just make the statement the strike will end. Let's make the statement that the government won't shut down. Okay, I think those things are going to happen. You want to buy those now when they're out of favor. They look bad on the charts. People are selling. And if you have a 2, 3, 5 year horizon, I bet you'd make pretty good money in a company like Disney. Iger's back. They're obviously shifting things around, trying to figure out streaming. The strike is clearly a negative, but they've got some great assets: ABC, ESPN, and more. And I think that's an interesting company to take a look at, nibble at that, at these levels. I think it makes sense.
Taylor Swift, certainly a huge economic engine. I discussed that thoroughly during the State of the Business event at the LA Area Chamber of Commerce had organized, and we called it the Taylor Swift after party after she left after that six-concert run, pumping about $320 million into the local economy. We had people from all over the world here and packing SoFi Stadium, which was tremendously impressive. And Taylor Swift has a home here in Beverly Hills as well. So, Taylor, if you're listening, thank you for all that.
A couple of homes.
Well, absolutely. Of course.
Yeah, no, it's really it's phenomenal. And look, the consumer's spending money, Frank, and that's what's kept us going. The U.S. economy is 70% to consumer discretionary. Even with rates moving higher, homes are being bought and sold. People are going out to dinner. And wages are going up, which we didn't really talk about. And there's certain industries that are going to be impacted by higher wages, but it's also putting more money in the pocket of a consumer. So there's double-edged sword with that. I think labor, it's a longer conversation, has had the short end of the stick for a while. That's starting to change. You're starting to see strikes in a big way. The airlines, with American and other spots as well along the economy, nothing really comes to mind. But keep our eye on the labor. It could have, somewhat negative impact on some earnings, but companies who can increase their prices, which are plenty of them, will do okay. And I hope, the blue collar folks can make more money. I think it would be better for the country and the economy. And I would love to see that.
All right, picked up on the cue there. People are going out for dinner, Jim. We don't want to hold you up on your reservation this evening, and we do thank you very much. It's been too long, so thank you very much for coming to the line. Jim Hausberg, always great to speak with you, and we wish you a great three-day holiday weekend.
Thank you, Frank, and I look forward to doing this soon again.
Thank you very much, Jim. That's great. That is Jim Hausberg, who is managing director at Hightower Advisors here in Beverly Hills and covering the entire Los Angeles area. Live with us here tonight on Mottek on Money on 790 KBC. Friends looking for legal help you can trust? Look no further than attorney Clark Fielding and the Fielding Law Team, your go-to destination for top-notch personal injury legal representation. Fielding Law understands that life can take unexpected turns, and you need a strong legal team to stand by your side. If you've been hurt in an accident that was not your fault and need help with a personal injury claim to obtain justice, Fielding Law is here to fight for you. Accidents happen, but you don't have to face the aftermath alone. Fielding's Law experienced attorneys are here to guide you through the legal process and ensure you get the compensation you deserve. Medical bills piling up, lost wages due to injury. Don't worry, Fielding Law specializes in personal injury cases and works tirelessly to recover your losses so you can focus on healing. The Fielding Law Team has a proven record of success. They've helped countless clients secure fair settlements and win in court. You can trust Fielding Law to provide you with the best legal representation possible. If Fielding Law takes your case, Clark and his team of sharks will personally work with you, fighting hard for you to receive all the compensation the law allows. Call Fielding Law for a free case evaluation. It costs you nothing to get that honest opinion, and do what I did. Put Clark Fielding's number in your phone under the word accident. That number is 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. Mottek on Money continues here in 790 KBC, heading into the three-day holiday weekend, Labor Day weekend. The Dow coming in for a closing gain today of 116 points at 34,838. The S&P 500 of 8 at 4,516. And the NASDAQ pulling back 3 points at 14,032. The yield in the 10-year note now at 4.19%. That's the one that impacts the fixed-rate mortgage rates out there. The price of gold today moving up $1.20 to $1,967.10 an ounce after getting as high as $1,980 an ounce. For the week, gold was 1.4% higher after seeing a loss of more than 2% last month in the month of August. Silver pulling back 25 cents at $24.56 an ounce. It was about 1.4% higher for the week, and looks like platinum pulling back to $968 and change, with prices up 2.2% for the week, and palladium moving up nearly 1% to $1,227.40 an ounce, down 0.1% for the week. Big story here, oil hitting a new high for the year, up $1.92 today to $85.55 a barrel in New York, up 7.2% for the week. And it looks like Brent crude in London, which is pretty much the international benchmark, of $1.72 at 88.55 a barrel, of 5.5% for the week. Both those up the highest we've seen since last November. And yep, at gas pumps here in L.A., 537 is the average price for regular, ticking higher again, heading into the weekend, 572 the average price for premium, and 599 the average price for diesel. It looks like that diesel price now 53 cents a gallon higher than where it was just a month ago. Gas prices, by the way, about 12 cents higher than where they were a year ago. Taking a look at some of the movers today, we see shares of Walgreens moving lower by about 7%. After ending at a 14-year closing low yesterday, the drugstore chain and healthcare services company said the company's chief executive has stepped down after 2.5 years on that job. Dell Technologies moving up 21% after that tech giant posted sizable beats on profit and revenue. And the MarketWatch reporting Broadcom shares down 5.5% after that chip and software company delivered a revenue forecast for the current quarter that failed to offer upside versus the consensus view. And Tesla shares down 5% today after the EV giant announced new price cuts for its Model S and Model X cars in China 2 weeks after having lowered prices on those premium vehicles. And now the latest news for you right here on 790 KABC. Mottek Money continues here in 790 KABC. Nervous time in Washington and maybe for the markets, too, as lawmakers are due to get back to work right after the three-day holiday weekend. On Capitol Hill, there are growing expectations now that there could be a partial government shutdown. Here we go again. There have been 6 of them since 1978 that lasted 5 days or more. And the S&P 500 stock index gained in the 4 most recent shutdowns. Will it happen again? Let's find out here as we watch that, as well as the Biden administration announcing the first 10 drugs that the federal government will subject to price controls under last year's so-called Inflation Reduction Act. Critics of the price controls say this will create shortages, increase costs on other drugs for consumers, and discourage companies from entering the healthcare market. Meanwhile, another report out from the IRS's own internal watchdog says nearly 500 IRS employees have been getting paychecks from big private firms before, during, or after their time working for the government, raising eyebrows. Let's bring in now the expert on all this, Grover Norquist, the president of Americans for Tax Reform. Grover, thank you very much for joining us and for speaking up for American taxpayers. First of all, give us an update on what's happening there in Washington and the possibility of another government shutdown.
Well, there's always the possibility of a shutdown if the Republican-led House and the Democratic-led Senate and the president don't agree. Back in 1995, you remember the new Republican House and Senate under Newt Gingrich and Bob Dole went up against Clinton. Clinton vetoed the budget the Republicans put forward, and then they announced to the press that the Republicans had shut down the government. So watch who the establishment press blames. In the case of Bill Clinton, the Republicans actually had the votes in the House and Senate. They passed a budget. Clinton didn't like it. He vetoed it. Well, Clinton didn't put his own budget out, but then they announced the Republicans were responsible for the shutdown. So there will be an effort by the Republicans in the House to say, here's a budget we think makes sense. It'll spend a lot less money than the Democrats want. They will say no, and then all the networks and PBS and so on will announce that the Republicans shut the government down. So it's the person who gets blamed for shutting the government down loses. You'd like to think the person with a plan wins, and the person who refuses to come up with a plan would be shamed. But that's not the way it's been in the past. It'll be interesting to see how it plays out. You always worry that the Republicans put together a tax plan, they spend some time at it, and the Democrats simply say, we say no, and the networks say, well, the Republicans blew it up.
On the air live with Grover Norquist, president of Americans for Tax Reform, and you brought back flashback memories of about the Clinton days when there was some bipartisanship, right? Here, the president has been saying he's been to be reaching across the aisle. And is there any bipartisan agreement happening these days?
No, Biden is the least bipartisan president of any, even worse than Obama. his advisors tell him not to work with the Republicans, that that's the smart move. And Biden has moved so far to the left. He was always fairly far left on foreign policy, vis-a-vis the Soviet Union and everybody else, very weak on foreign policy. But he wasn't always left-wing on everything. His administration is, which suggests that his advisors are making decisions rather than he is.
Let me ask you about this. Now, the federal government will subject to price controls a list of 10 drugs under last year's so-called Inflation Reduction Act. What do we need to know about that?
Well, over the last 4,000 years, we've learned that when you put price controls on anything, from Abyssinia to the Ottoman Empire to ancient Rome to now, when you put price controls on something, you get less of it. Because you've said, normally, the way to signal to the market, we would like more of this, is to see the prices go up, and then people will say, oh, well, I'll build more of those if the prices are going up. When you take the price out of the market and you say we're going to put price controls on rent or drugs, people who invest say, why would I invest in a pharmaceutical to cure cancer if they're going to put a cap on how much I can earn? I'd be better off investing in a casino or any number of things. So it will chase investment, American and international, out of the United States and away from pharmaceuticals, an industry the Americans lead on. So it's very damaging to us in terms of international competition, very damaging to us for our health, for crying out loud. It is one of the truly problematic things that Biden did.
How is it that the wisdom of the ages, you mentioned correctly, 3,000 to 4,000 years of wisdom seems to be washed away here?
Well, it's interesting. Not everyone was around 3,000 years ago, and some people went to public schools and didn't read any history. So it is sad that there are people who don't know the history of the failure of price controls, but you can reason to it. I mean, if somebody said to you, there's a limit on how much you can make investing in industry X, you'd say, well, I'm not going to invest in industry X. Well, why would you do that to pharmaceuticals? One of the most important industries in the world in terms of saving lives and making progress and making the lives we have less painful. That's a very important industry. Why would you damage it that way? And it's very unfortunate that Biden has done that. He does it to the costs of health care come from hospitals and from doctors. That's what drives the cost of health care up. Pharmaceuticals, actually, the cost of pharmaceuticals, drugs, have gone up more slowly than inflation over the last several years. But hospital costs have skyrocketed. And hospitals go, don't look at us, go yell at the pharmaceutical companies.
On the Air Live with Grover Norquist, I know you love talking about the IRS and are an IRS watchdog.
Yeah.
What do you make of this internal watchdog report that says nearly 500 IRS employees have been getting paychecks from big private companies before, during, and after their time working for the government?
Well, I think there's a problem if it's during. You shouldn't be getting a paycheck from the government. And I do think it's healthy to have people move from the private sector into the government and back again, so that because otherwise people in the government have no idea how the world works. I really worry about somebody who's gone to the government and is a regulator who doesn't know anything about the economy or the world that he's supposed to be working with or regulating. So I don't mind people working at one job and then another. I would object if it's happening at the same time, if you're getting paid by the government. And it's like, AP hires people and they get paid by left-wing groups to help pay for their employees. And all of a sudden, their reporting gets more left of center. You should not be paid by two people at the same time, unless you make it completely clear that's what's going on. and certainly not the government and somebody else. If you're a government employee, you should be a government employee. If you're a private sector employee, you should be a private sector employee, and those should not cross at the same time.
All right, and something else that should be noted here, interest will start accumulating on student loans again starting today following a pause on interest accrual that's lasted for more than 3 years during the pandemic era. I know this is something else you've been covering.
But absolutely, that has cost American taxpayers a lot of money, billions of dollars, just to pause, because they said you don't have to pay for the interest of your loan for X number of years. It was done as, I don't know, something to try and buy votes. And it's a bad idea when the government spends other people's money. Not everybody went to college. And of the people who go to college, not everybody took a student loan. And of the people who took student loans, not everyone, waited on paying it or didn't pay it. So it's a fairly small number of people who are benefiting and a very large number of Americans who are paying for it. So Biden's stealing from the many to hand to the privileged few.
Grover Norquist, thank you very much for joining us live here tonight. That's Grover Norquist, the president of Americans for Tax Reform, America's leading taxpayer advocate. We wish you a great holiday weekend, Grover, and thanks again for joining us live here tonight.
You too. Thank you.
Thank you very much. And right out to the freeways we go now. You're on 790 KABC. Friends, I'm not exaggerating when I say this. QC Kinetics can change your life. You can live again without that chronic joint pain and without drugs or surgery. It's Frank Mottek here. QC Kinetics is advanced regenerative medicine. They take your body's own concentrated healing properties and put them right into your joint to restore and repair that damaged tissue that's causing you all that horrible pain. The patient satisfaction reports are astonishing. Finally, a real alternative to the old ways of dealing with pain. And unlike surgery, there is no downtime with QC treatments. If you have constant pain in your knees, hips, shoulders, or back, you need to call and get a free consultation from the medical professionals at QC Kinetics today. Imagine this autumn moving around pain-free, doing things you love again. Walking, hiking, playing with your grandkids, you name it. Call QC Kinetics and see how the latest advances in precision regenerative medicine can attack your pain and bring you lasting relief. QC Kinetics, locations in Glendale, the city of Orange, Mission Viejo, and now also in Costa Mesa. 213-997-PAIN is the number. Call it now, 213-997-PAIN. Again, that's 213-997-PAIN. All right, your chance to win something now. 790 KBC welcomes, you guessed it, the Monkees. Celebrated by Mickey Dolenz, coming to the Libby Bowl September 15th. Tickets are on sale now at AXS.com. And right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you're caller 9. So call right now, 1-888-795-2222. Well, what's going on in the smoke-filled rooms in Sacramento ahead of the Labor Day holiday weekend? Of course, we'll probably be surprised. Lawmakers meeting behind closed doors to decide how to spend your taxpayer dollars. Let's get an update now from Susan Shelley, columnist for the Southern California News Group, and yes, host of the Howard Jarvis radio show, heard Monday nights right here on 790 KABC. Susan, it's always great to speak with you. Give us an update on what is happening there in the state capitol.
Well, Frank, we have a couple of really dangerous bills that have just advanced to the Assembly floor. These are ACA 13 and ACA 1. They have to be stopped. So I hope everyone will jot this down and call the Capitol. You can call now, you can call over the weekend, you can call Tuesday morning because they could vote on these on the floor Tuesday. Here's what they are. They're both attacks on Proposition 13. They're both constitutional amendments. Now, ACA 13 is designed to stop a particular taxpayer protection measure that has already qualified for the November 2024 ballot. It's like an mRNA shot that's been programmed to go after the Taxpayer Protection Act. What it does, it creates special rules for passing constitutional amendments if they are citizens' initiatives that protect taxpayers. All constitutional amendments in the whole history of California since 1849, Constitution was handwritten. They've always required a simple majority of the electorate to pass.
Wow. That is amazing. Well, you're live with Susan Shelley here, and it's been reported they're calling this day one of the most pivotal yet secretive days for hundreds of proposed laws are working their way through the state capitol, including the ones that you just mentioned, a day when the state legislature's powerful appropriations committees quickly pass or kill bills for the year without any public discussion. They call it Suspense Day. I've never heard of this, but how long has this been going on?
Well, this is the way they do it. They have their hearings earlier in the session, and then they throw things into the suspense file in the Appropriations Committee, and then everything they haven't made a decision on, boom, in one session, in minutes, they just go right through them like a hot knife through butter, and then they go to the floor and they can be voted on very, very quickly.
All right, so you highlight some of the other ones that you're watching in all this.
So ACA 13, which changes the vote threshold to pass constitutional amendments just for taxpayer protection, and the other one is ACA 1, which lowers the vote threshold to 55% instead of 2/3 if it's infrastructure taxes. And of course, infrastructure can be anything. So what it does is it wipes out the 2/3 vote protection for local taxes for a special purpose. So that has to be stopped too. That's ACA 1.
You're listening live to Susan Shelley reporting on this important information here, watching out for you, the taxpayer here in California. I don't think there's any place on the air, certainly, that's reporting all of this. So thank you for sharing that important information here, Susan. And I know recently you announced the new effort to overturn that so-called death tax, Prop 19, which was misrepresented to voters and is causing a lot of pain here. Can you give us an update and the latest on that effort, please?
Yes, the latest on that is it's going very well. We have a new system for qualifying an initiative for the ballot. We are sending the petition out electronically. You can print it at home. It has to be paper, it has to be ink, but for the first time you can print this initiative on a one-page sheet of paper, 8.5 by 11 on a home printer, and that will be legally valid. So all you do is go to repealthedeathtax.com, repealthedeathtax.com, and you click download the petition, and you get the petition and complete instructions, and you just fill it out and mail it back. And I think we're going to do some advertising on this statewide. I believe we can get 2 million signatures doing this because it's so easy for people to do it at home while they're thinking about it.
And refresh our memory how heartbreaking this whole situation has been since Prop 19 kicked in and again was misrepresented, I think, to the voters.
It really was. This Prop 19 looked like it was about helping wildfire victims and helping seniors move to a new home, and it was, and it did, and that's fine. But it also had hidden in it the largest property tax increase in the history of California, and it hits people when they lose their parents. When you inherit property from your parents, it is now reassessed to current market value, where for 35 years they could transfer it to their kids and it would not be reassessed. It didn't count as a change of ownership, so the tax bill stayed the same. And now the tax bills are quadrupling in some cases. It's just crazy. And people are forced to sell family property that their parents worked so hard to build a little generational wealth in the family and pass something on, and kids are being forced to sell it because they can't pay the taxes, which is wrong. So we are going to reverse that part of Prop 19, leaving the other parts and just reversing the tax increase, and that's repealthedeathtax.com.
I'm sure people that have had this heartbreaking experience will be eager to share those stories. And would that be retroactive, by the way, if this is repealed?
Yes. Yes, I'm glad you mentioned it. That's very important. If you were caught in this while Prop 19 is in effect and you inherited property and it's been reassessed to market value, you will be able to get your original assessment back again. What they call the trended base year value, which is the Prop 13 value when you bought it, plus that 2% a year for inflation. You'll be able to get that back as if the reassessment never happened.
So important.
And that's very important for people.
Certainly, Susan. Thank you very much for joining us live tonight. That's Susan Shelley, columnist for the Southern California News Group and host of the Howard Jarvis radio show, heard Monday nights here on 790 KABC. We wish you a great weekend, Susan, and thanks for joining us here. This is Mottek on Money on 790 KABC. I'll be back again on Tuesday following the 3-day holiday break. Be sure to join us and catch the Mottek on Money podcast right here.
Save even more at Giant when you stack your savings. Bonus buys, digital coupons, and flexible rewards. Sign up for free and start earning points today. More savings for you, only at Giant.